Okay, welcome back. We've got, 30 minutes to go for the pre-open session. There is a lot to sort of get by, lots of results, reactions, etc. Let's kick it off with the first one. So we've got Borosil Renewables in focus. First quarter was a muted quarter. The losses have widened. EBITDA is down on a year-on-year basis. Margins have also contracted. Mr. Pradeep Kheruka is Executive Chairman at Borosil Renewables. He's with us to take us through what happened and how things look. Mr. Kheruka, good morning. Great to have you with us here. Thank you for your time. So, contextualize the numbers that we just seen for Q1. You got help from the budget in terms of reimposition of that duty, which I think we did speak about right after the budget. Maybe that will show up in the forthcoming quarters. But what really happened in the quarter?
So actually, a number of things happened in the quarter, chief amongst which was I'd say that the quarter that just went by was better than the one before that, and therefore we are hopeful. One of the things that happened, which was not expected, was that there was a shortage of shipping space between China and India, and that led to a rise in ocean freight. So landed prices rose, and with that, our selling prices rose by about 6%. That was helpful in reducing our losses, and the losses stand quite reduced now, and we're looking forward to a positive quarter, which is an ongoing quarter, and we expect that things will look up from now. The government's decision to withdraw the exemption is kicking in from the 1st of October.
1st of October, yeah. And you will have that help. Just to complete that point, what is the cost for sort of moving a container, freight costs, between India and China? You said it had risen to about $3,500.
From $700, it went up to $3,500. It's back again to $2,000. And these rise and fall like the stock market. But anyway, that is what it is. But the other big thing that has happened is that the government had implemented the ALMM order with effect from the 1st of April, and they have been enforcing it, which means that for a wide variety of applications in the country where government funding is involved, modules must meet a certain technical specification, which is designated by ALMM. And so far, only Indian companies have been certified under ALMM, and therefore, the demand for Indian modules has risen very sharply, and that we can see in the sharp rise in demand for Indian glass. So that has improved a lot.
Sir, Mr. Kheruka, so let's get some idea in terms of timelines and numbers. So the first quarter, you have a loss of about 14 crores. You're saying things will get better, and then the customs duty relaxation also kicks in. So what should we expect? I mean, by when do you go back in the black? How is Q2 shaping up? And give us an outlook for the entire year as well. I mean, how will you be on the top line? And for the year as a whole, what can we expect at the profit line?
You see, I'd say that you asked a number of questions. I'll try to answer them all. The first question is, what are we expecting going forward? The answer to that is that I never make forward-looking statements, but I would say the last quarter, which we just saw, for which I gave the results yesterday, should be the last one. Should not be the ongoing quarter should not be like that, which means that it should be in the black. That's what I'm looking for. Looking at the month that went by, the month of July was quite promising. And if things continue like that, then we should be in the black in the current quarter. And that is, mind you, without the kicking in of the import duty. Once the import duty kicks in, it's going to be even better. In Germany, because the losses of the Indian operations were not that much, what you just said, it was contributed by the German operations. And in Germany, we have just implemented a new glass processing line, which should be very much more, it should be much less in terms of the costing. And so that should reflect on the numbers. And we have made great strides in exporting glass from Germany. Meanwhile, the European Union had allowed from the at the union level to allow solar component and solar module manufacturers to be given various help from the government, things like tax breaks and so on, which would incentivize a homeowner to use a domestically made module as compared to the imported one. Now, these regulations have come into France, in Italy, and in Austria. So if you're living in one of these three countries and you use a European-made module, then you get a big tax break, which really reduces the cost of ownership. And this would be something new. So we think this is going to launch a big spurt in the demand for rooftop solar, which will reflect on our glass, our German glass. Germany is yet to make this transition and to announce. Maybe they are still working it out, what they want to do. These things take time, and hopefully they will be done with it in a while. And with that, we should be able to find a big boost in our sales to German customers.
All right. Hi, good morning, Mr. Kheruka. This is Nigel on this side. You know, the last few times we've interacted, you have been saying the government needs to put some action in. And it's good to see from your business perspective that BCD has come back in, and second half of the year could look much better. So the European piece, let's keep it aside. Let's focus on the India business, which is bulk of your revenues and bulk of your profitability. One positive I look at in your standalone numbers is that margins have gone back up to double digits. And second half of the year will be far better. So do you get to those high teens or 20% plus margins in the India business? Realizations have moved up. You have some protection as well. Is that a possibility?
That is a possibility.
20% plus standalone margins. What you were doing not too long ago, sir.
I would not make any statements myself, as I absolutely refuse to do at all times. All I can say is that we are today just about able to turn a profit. We are a whisker away from turning a profit in the Indian operations. And if 10% comes in, that will just go straight to the bottom line.
All right. And
yeah.
Got it. So then second half of the year is looking better. And very quickly, you have some fundraise plans as well, 450 crores. The rights issue, when does that take place? When should we hear about that? You had mentioned that you want to reduce debt to around 200 crores, I think, post this fundraise. So quickly, if you could wind it up with that.
We have been tossing up so many, it's a dynamic situation in which we live. And the rights issue of 450, the board has approved. We already have approval from the stock exchanges. There are some other clearances we need. And once that is done, I think by the end of this month, we will be having a better idea of how the finances are looking, because we don't want to overborrow. We don't want to over raise capital. So that still remains to be seen. But we've taken the permission for 450.
Can we annualize the 370 crore top line, or will it be much better?
I would not like to. The top line of 370. You see, if the 10% duty comes in, selling prices move up 10% straight away. So if that happens, then the 370 obviously will need to change. Need to go up. Yeah.
And this tariff between India and China, it is Chinese imports or Indian exports from here, because higher tariffs should have also prevented cheap Chinese imports, right?
Well, China, these are tariffs imposed by the Indian government. Now,
no, I'm talking about the freight rates, the very high freight rates in the quarter.
Yeah, the freight rates we don't. I mean, nobody. There are very few exports to China from.
Exactly. So it should have prevented very cheap Chinese imports as well, right? So, but that obviously did not help.
No. Chinese imports. Chinese imports were coming in at $700 a container. It's now about $2,000, and this problem has been occasioned by the extra time that is being taken to reach Europe and the United States. If you want to go to the Atlantic coast from China, you have to go around the Cape of Good Hope. The Suez Canal is no longer an option. And likewise, for shipments to Europe, you have to go around Africa. So the amount of time spent on the water by containers is 3 times longer than what used to be. So obviously, there's a shortage in supply.
All right, Mr. Kheruka, thank you very much. Sorry for rushing you, but it's always great to speak with you early on and get a sense of the numbers. And good luck to you as you sort of move forward.